I'll start it. I'll just do it here. Hello, everybody. OMISEGO. OMISEGO. OMG. Oh my goodness. Is this coin going to keep flying up in the face of the rest of the market kind of suffering? If I pop myself off to the side and we look through my list of coins here, you can see there's an awful lot of red on the day here. But OMISEGO is obviously doing very, very well. Nice to see that. Let's analyze this thing. Find out key targets to be bearing in mind if we're going to continue the thrust towards the top side. Find out some key profit-taking targets. Do everything that we really need to do and come away with it with a little bit of education and a better understanding of where we've been in this particular market. Fantastic. Everything that you basically would need to know if you want to be a really cool cat in terms of your trading. As the intros run here, I'd invite you to hit the like button. It really helps the channel a lot. It helps it so gosh darn much that I would really appreciate it. And join me for a live stream someday. As you can see, this is filmed during a live stream. If you're here for a live stream, you get to ask me questions, etc., and all that. Okay, so you get this. So join me for one day, right? Make myself nice and big again here, and talk about a couple of key concepts. So if you're looking at this chart here beside me right now and thinking, "Oh my goodness, the candles are too small, Rocky. You need to zoom in a wee bit." Don't panic. What we're doing here is taking a look at a macro. Come on, brighten my face up. A macro look at the charts right now and trying to see where we've come from just real quick. And I'm going to take a Fibonacci tool from the high over here down to this low here. Now, I'm not sure if this is the entire history of this coin or not on Binance. It may have been traded elsewhere first, but I'm going to just look at this key areas in the market. That's an obviously key high, obviously key low. Where have we come from since? And I like to look towards the 1618 Fibonacci retracement point as a general target. So I'm actually going to drop a horizontal line here on top of the Fibonacci here, just so I know where that actually is in relationship to the price. Now, if this doesn't look quite like your chart, maybe it's because you've got yours on linear. I've got mine on log, but I'm using my Fibonacci's with actually this button checked here. Fib levels based on log scale. So actually, are the same numbers that we're talking about. So I drew my line in at the 1618 in there at $14.50 for everybody following along. Right. Cool. Excellent. Remove that from there. We're done with that section. But what could be your next profit-taking target up afterwards? And another really good way of doing it is the exact same thing there, looking between our next two really significant zones. Don't think it takes a genius to figure out that $10 area down towards this $2 area with this 80% retrace between these two zones is super important. And what we're seeing right now is the prices have been up above that so far today. And where are our targets? Well, the 1618 is up here at the $26 area. Notably, the 1272, the first of the three targets that we really look to, which we have already taken out from the other Fibonacci we had on before, here in this instance lines up with the 1618 nicely, giving us this great big profit-taking zone up above to look to. That's going to be a key area if we keep going up. Excellent stuff. Zooming on in a wee bit and just taking a look at where the price action is right now. In fact, actually bringing that Fibonacci back on so you can see that right here where the price action is right now is just in at our previous high. Okay, so we're just at that 100% area. If we see a retrace from here, what could happen? What's typical of happening, and then therefore where would be our good rebuy areas if we're talking about BTFD and looking to buy a dip. And that comes in here at $7.50. I know, shocking, isn't it, in terms of percentages, what we're looking at. So this would be a 30% drop off in the prices, and that might be your next best buy area if we see a retrace. Now, what I'm going to say is, for the folk back home doing this, if we see prices go up any further, just continue dragging your Fibonacci tool up and look towards where the 236 is. And there's two targets, going to be the 236 and the 382, and that's going to be for you to kind of decide. If things obviously don't take out the wick of today, and that ultimately is our high, then that means 750 is that target. Now the 382 is in here at 50. 6.8, and I don't want to see a 50% retracement, although if we did, we can see that there's various areas here in terms of support and resistance that makes this super crucial. In fact, I don't even need the 618 on here to show you this. I can say this wick here, this wick here, this wick here, this wick's here. So we know that there's a zone in there where the prices could ultimately go to in at this 50% retrace area, and let's just call it in here at around about $4.60 or so. Now that's going to be the cutoff point for me, with a zone going all the way down towards the 618 Fibonacci area to say that this zone is going to be important. Now, why is it? Not because of the 618, it's not to do with the 618, it's not to do with the 50% retrace, why I'm making this particular point. Just that's where that lines up with. But why I'm saying that's significant is because that if we look at this wick here, we can see that's actually our key market structure area, and we have two of them, okay? We've got two of these, this one here and this one here. Now the difference between these two lows is that if you look at this and say this is a high, this was a low, and then this is our high, actually this here is just flux along the way. It's not actually a higher low. It's just noise, actually, that could convince you that you've got a higher low in there when you don't actually, and also could convince you that you've got that real, proper, significant support area when you don't necessarily, giving you that, depending that you're at the will, you know, you're at the whim, operating at the whim of the bigger fish necessarily in this zone here, and that's the risk that you're operating in. So what that really translates to is that if we do see any pullbacks, what I'm looking to is not to try and catch the knife, rather to actually try and buy it on the retracement towards the top side, okay? Not financial advisor, not financial advice, but that would be how that would work. And that happens for all of these as well, because we don't know if the 236 in here is going to be respected. We could see it coming all the way down to the $7.50 or $6.90 area and then back up, and it would be on the recross of it that I'd be more inclined to want to enter into any positions in around here. Anyway, what have we done? For a quick summary then, is we've actually come up with the next two key profit taking targets. That's $26 and $14, okay? That's what they are towards the top side. Very, very, very high. Of course, take it off log, you can see how that is, but that's the excitement of this bull trend that we're in overall, and that's what to look to. But we've also talked about key areas to be aware of, and the fact that we could be about to see a 30% retrace on this one overall at some point, having come up here and challenged that high. Let's just sanitize that real quick by taking a look at our RSI, showing us that we have actually got bearish divergence. It's not just once or twice, but was actually here across the board. We've got that bearish divergence for quite a while. The MACD, on the other hand, doesn't show us that bearish divergence. It's really nice that we've got that continued upward strength. In fact, we are also seeing that we've got, in terms of the MACD, this hidden bullish divergence in here at the previous low area before we rose up the way. Perfect, giving you that perfect buy. That was really lovely for people if they were buying it on the 25th of February and they noticed this hidden bullish divergence. And then indeed, if they bought it once it already started to break past these key areas. So we're seeing all of that on the go. Here we have the MFI. It's not divergent either necessarily, but the RSI is giving us a wee taste that it could be. So that's just the warning for us. Overall, of course, I'm very, very happy with the price action. Just want to point out again that there's sort of the second J. Wells Wilder Jr. Oscillator I use here, the DMI, has of course got that divergence on it too, but that's premature to say. So we would need to have a pullback, and to have that pullback happening, you know, that would be us taking it. We'd need to see us coming all the way down towards 660 to say that either of those were divergent at all, you know, to be able to say that that was happening at all. So far we're not there. It's just, you know, we just need to see, can we keep going? At some point something's got to give, and when it does give, I'm looking towards that 236. So we've walked through some education, some targets, some key profit targets. We've looked at oscillators. We've talked about how you could manage your position if the if the prices keep going up and you move your Fibonacci up the way. Talked about quite a lot in this episode. Not been that long, so I hope you got some value from it. If you have, and you didn't hit that like button during the intros, then go on, please do it. It would help me out an awful lot, and I put a lot of effort into this, and I care deeply about my audience and my relationship with the audience, and I really want it to be positive and healthy, and I'd like it if you were a part of that too, and you came back and all that stuff. So, you know, look, trying over here, and I'd appreciate the like, so thank you.